Welcome to your Mortgage Minute. Today we're going to talk about a buy down agreement. Many people have been asking me because we had that promotion this month where we had a free 1% buy down on your interest rate. So if you started if mortgage rates for 1 point were 6%, you got 5% for a year at no charge to you, and then year two, you'd get the regular rate. So people ask, well, how do I know for sure I'm getting that? So I just wanted to share an agreement from a closing in June 5th, to just show you how the language looks and kind of reassure you that this is how it looks, and kind of your guarantee that you have it in writing, right? So you'll see either conventional or FHA/VA buy down agreement. That's the document. You'll see your loan number, your name will be on there, your case number if it's an FHA loan. And so we have a free buy down, but you can have a lender paid buy down. You can have a seller paid buy down. Somewhere, a chunk of money is coming from somewhere to buy down your payment. It's really the payment that's being bought down. So let's look at how this works. And this is a temporary buy down. If you pay points to lower your interest rate, that's a permanent buy down. So on this loan in particular, it says that the note rate, which in this case was 5.970, and she paid 0 points for that. The note rate for principal and interest. So we're not talking about taxes, insurance. We're separating out the mortgage payment, which is principal and interest, should be 2665. This was on a loan amount of 438, I think. So our buy down principal and interest is 2386. So she is saving for the entire first year, month 1 through 12, she is saving $279.39 per month. So that $33.52, that money, that $3,300 is being set aside in an escrow account. Again, there's that word, escrow account. It's being set aside just like the property tax and insurance money. It's in a savings account with the lender, and every month they will draw from this account to make up the difference between the $26.65 that is the normal payment, the forever payment, and the $23.86 that she gets to pay the first year. So your mortgage payment, it says payments of principal and interest after receiving credit of the temporary buy down funds from the escrow account will be as follows: $23.86 for payments 1 through 12, computed at 4.970. So how it works is a 1% buy down for 1 year is called a 1.0 buy down. And how we calculate it is we see, okay, the locked-in rate is 5.97. You're going to get 4.97. Whatever that payment is, the difference for 12 months is going into a savings account. Typically, this costs about 1% of the loan. So her loan amount was 438. So she'd be spending, or the seller would be spending about 1%, like a point, to buy down that rate. In this case, it would have been 0.875. So later, it says beginning in the 13th payment, with the 13th payment, and for all payments thereafter, this agreement will terminate, and monthly payments of principal and interest will be $26.65 per month. So what do you need to know? The buy down funds will be held and applied consistent with the terms of the above schedule. The buy down funds are not refundable, and borrowers' only interest in the buy down funds is to have them be applied to the payment. So in other words, if we refinance you in month 6, for example, you don't get that money. That's the bank's money. Now, if you or the seller paid for a buy down, that still goes into that savings account or escrow account, and you would get that money back. So the difference here is that the lender paid for it out of pocket. So the buy down funds may not be used to pay my past due payments. So if you get behind on the mortgage, they can't catch it up. You can't take that $3,300 and apply it to 1 month's payment. If the mortgage is paid in full during the buy down period, any remaining buy down funds will be credited to the unpaid principal balance, so you don't get the cash. In the event of a foreclosure of the mortgage to which the buy down relates, the lender investor is entitled to any remaining funds because you're behind on your payments if that's the case. So hopefully that's helpful to you. This is the agreement or something very similar that you'll see with your lender. This is our actual document, but any lender will have a similar agreement explaining where the money goes and how it's dished out. So I hope this was helpful. Have a great day.